Hello everyone, welcome back to my channel. You're watching the Stock Monger with me, Ali Abbas. Let's recap the last week that went by. It was quite topsy-turvy, gap up, gap down, big swings, 1000 points, 1700 points drop, and then a 1000 point recovery. Bank Nifty has just been doing a lot of zigzags, not only this past week but the last few months, and ever since the February crash due to the war crisis and the global situation. We've just been seeing immense volatility. Yesterday, on Friday, the trade that we had taken, that I given in the community group, initially I said that yes, I'll be shorting puts and or I'll be buying calls, because I did see that there's a gap up opening. My plan actually was to wait for a retest or a retracement for it to come back down and then swing back up. So I'll quickly take you to the charts and explain what happened. And it would be a balance, not exactly a bad trade and not exactly a proper risk management. But yes, there was a miscalculation, and what I had anticipated did not happen, and I'll show you on the charts why short. Please watch the video till the end. There's some very important points that I'd like to inform you about how to. All that said and done, we are looking for more volatility going across the markets in the coming days. I don't know about June, because June's open interest data is not yet clear. There's just too less data to analyze. In the meantime, if you would like to understand how I make my entries and exits and also do my risk management on every trade, especially in futures and options, please do visit my website stockmonger.in. The link is in the description, and you can register for the courses on the how to plan your trades with the moving averages. There's a combination that I use of indicators, and how do I use my moving average indicators is explained in detail in those courses. So stockmonger.in is the website. You also get a month's access once you register to the community page where I post all my trades. So I'm looking forward to seeing you on the community page and enjoying the moves that we make, all of us together. And if you would like some proof of concept, you can visit the track record page on the same website, and once you enter that, you will see all the trades that I have taken, and how many points that we have booked on futures and options, and also the equities that I have bought and sold recently. All my equities till yesterday, till Thursday, were in deep red. There were some that broke even on Friday due to that big up move, especially the mid and small cap stocks, which I've been stuck with since January. So I'm actually in the process of clearing all my holdings right now at break even, not even profit, at break even, and then start planning fresh trades on certain indices that I also explain in my videos and in the community page. Going forward, there will be some exclusive videos for the members on stockmonger.in explaining the levels that I'll be taking and the positional trades that I'll be taking on futures and options. So if you're looking for safe trading, for proper risk management, and how to book a good 1 to 3% returns on your investment, then please do register on the website and be a part of the community. So let's go on to the analysis now, and I will see you tomorrow on the community page where I'll be posting the trades. So traders, this is Friday's move. As you can see over here, it opened gap up by a good 400, almost 400 points, and it just started rising. Now this is the 15-minute candle. So if you are going to take a trade, I had posted in the community group that I will be taking a trade or shorting puts or buying calls. So what generally happens is, if you see the body of this 15-minute candle, it is this big. It's a range of 200 points. Only the body I'm talking about. So ideally, what happens is there's always a price action that happens over here. The 15-minute candle, you take the half length, and only when it retests and starts to move up, this is where I would have shorted some puts or bought some calls. This was the two scenarios that I was waiting for. And when it touched the second resistance, if you go back to my community group, for those who are registered, they can view it. I had posted that the first resistance will be at 33,640 and the second resistance will be at 34,010, and that's exactly what it broke. Now when it broke over here, I told, when this second candle started forming, I told that, you know what, short a call, and let's wait for it to, give a return of 30-40 points, because such a big gap up and an up move of so many points. So I thought, it will come down here at least halfway of the candle, and this will be my exit point. Now that did not go according to plan. It hit my stop loss over somewhere over here, and I got out of the trade with a 100-point loss. Not a problem. This week, the week gone by has done very well. Now over here, if you see, it started consolidating, and I did not take any trade after that. After I got that loss, a few trades, a few scalps just to reduce the loss. Some went in my favor, some did not go in my favor. So that 100-point loss stayed at 100 points loss. So when it started consolidating, it tried to break this level of 34,100 multiple times, and then it started retracing over here. It came down below the resistance level, so it broke that level. Now here I thought, it's just going to zigzag and there's no point taking a trade. Boy, was I wrong. It did a price action. Once it broke this, again there's no retest over here, you see. So it completely went against the price action rules. Here it did a price action where it stayed above this resistance that it was trying to break at 34,150. It did a price action, but then by that time I was done. I had enough of the market that day, because this move was huge, 1,000 point plus move from the closing of Thursday. Now, usually, what my plan was that if it opens gap up somewhere below this level, I'll wait for it to retest somewhere over here and then buy a call, and then it will shoot up. What happened was something very different. It opened up above the first resistance and just kept climbing. So this was a very, very unpredictable move. Price action watchers may have got stomped out of the trade if they tried to short a call for this retracement, or if they tried to wait for a retest over here and then a breakout. So whoever got this made good, and whoever got this also made good towards the ending. So usually these trades are very difficult to catch. Now we'll see what are the levels that we can watch out for on Monday. So here is the first resistance that we'll be drawing. This will be at 34,600. The second resistance, if we go by the data on a hourly time frame, I would go as the next resistance to be at 34,800 over here. This gap will be filled, but I don't think there is some scope for it now, given that the global markets fell a bit after the Indian markets closed. Like US, it started coming down, and Singapore Nifty is also showing a negative opening. So the support that I'll be drawing here is firstly at 34,000. The second support I'll be looking at is around this gap at 34,650. Now that's a big support, but we know how selling can happen. There's just such a fast selling that has been happening in the weeks gone by. This is your bank nifty levels. Now for Monday, these are the levels. If we just look at the hourly analysis, you will notice that there is a trend line. Possibility is that we hit this trend line and then go for a sell-off just above the support point, or we look for a gap down opening and a sideways market within this trend line. So this is something I will watch for Monday. It's a hourly time frame. If I go for a daily time frame, it is somewhat on the same lines. We can expect this range, this box over here between 34,800 and 33,200 to continue till there is a proper breakout retest, and then the gap is covered. There'll be a lot of confidence in investors once this resistance is taken as a support, and then there'll be an up move. But given the zigzags that have been happening, it's just been a wild ride over the past few months. Let's look at Nifty. So here we have Nifty. Nifty, if I have to draw that trend line, it's respecting the trend line here. Rejected once, twice. I can try to swing back above it. 3 times, and 4 times. It's just stopping above that. So going by the opening of tomorrow, I can expect a certain gap down, or at least a range below this trend line. Now if the trend line breaks and there's a support, yes, we can see some resistance at this level of 16,620. That will be the second resistance. The first resistance I will draw is at 16,480. The support will be at this level where it started out from. I'll take it at the opening, 16,040, and the second support will be over here at 15,930. So these are your levels for Monday. Watch out for that. I'm expecting another zigzag between this range of 16,480 and 15,930. So let's wait and watch what happens on Monday. If you'd like to understand how to use moving averages on intraday trading, please do visit my website stockmonger.in. The link is in the description, and please do watch the course on moving averages and how you can apply them for your intraday and positional trading. I'll see you all tomorrow on the community page, and happy trading for the week ahead.